Hello and welcome everyone. It's 2 o'clock, so I think we'll get started. I'm sure a couple more folks will be popping on in a minute here. My name is Shelby. I'm the Professional and Organizational Development Manager, Director for Montana Nonprofit Association. For those of you that know and have been around, Montana Nonprofit Association believes that nonprofits are vital to our communities, our families, our state and local government. Especially in times like these, nonprofits provide so much of what everyone needs to stay safe and healthy and happy. Because of that belief, MNA tries to provide resources, access to member benefits and services, as well as championing nonprofits at the state and federal levels in whatever way we can. The rest of the year, that looks a little differently. Right now, that means we're doing our best to keep you all apprised and informed of federal relief as it's coming through, changing situations and circumstances and how they affect nonprofits, and making sure your voices are represented at the state and federal levels. And today we have a great opportunity to connect with Suzi Berget White, who has a lot of experience in businesses generally, in working through things, and we're going to touch on the federal loan and relief process and hopefully get some tips to get you started making the decision and what's right for your organization, and then how to start on that path. Before we get started, I just want to let you know I will kind of mute you all throughout the presentation. Feel free to stay on video. I think it's always really heartening to see the faces and see your engagement. We'll have a couple of specific opportunities for question and answer. Suzi will pause after describing some things, and you'll feel free to either raise your hand and unmute yourself to ask a question, or go ahead and type it into the chat. Given the complexity and changing nature of these topics, we'll try to get to as many questions as we can and do our best to answer ones we don't get to in a follow-up email. And do know, if you're watching a recording of this, things are changing by the hour. And so please, please take everything you learn here with a grain of salt and compare it to current information. We'll try to have that always updated and posted on our website, but just a little disclaimer there. Okay, so thank you all for being here. I know it's snowing in Helena, which makes staying inside a little easier, but not much. So I'd like to introduce Suzi. So Suzi Berget White is the Business Development Director with Prospera Business Network. She is an innovative business leader who serves as the Business Development Director. Her management, counseling, and teaching style is based on real-life applications, blending her business education with her personal experience as a business owner, fundraiser, human resource manager, public speaker, and trainer. She has counseled more than 600 female business owners throughout Montana and has been instrumental at creating content for trainings that offer clients transforming questions and tips that help them break through, add value, and get results. She's an active member of the business community and her local community, winning awards such as the 20 Under 40 Years Old Award in Southwest Montana, serving on Montana Ambassadors Board and is the vice chair for the Bozeman chapter, as well as serving on Representative Gianforte's Business Advisory Council and the Bozeman Job Service Board. I can tell you from just having met her that the attention to detail that she brings, both for the content that she's providing and the level of applicability for you, is at an incredibly high level. And so we're really excited to welcome her here and get started with hopefully answering some of the questions that you all have. So Suzi, I will go ahead and pass it over to you.
Thank you so much. It's so good to be here with all of you guys. I know we have a big group today, and like Shelby said, I'm going to try to stop a couple times to make sure that we're answering questions along the way. I do know that a lot of this information is very complicated, and there's a lot of information out there. So I've tried to dissect it as much as I can. The CARES Act itself is just under 900 pages, and so it's been a lot of just research on the back end, just trying to figure out what's applicable to us and what's going to be the best way for our local nonprofits to get access to that money. And so just to tell you a little bit more about my background, I've been in fundraising and working for nonprofits for as long as I can remember, and professionally for the last 20 years. And then a few years ago, I transitioned into business counseling over at Prospera Business Network here in Bozeman. And I was the director of the Montana Women's Business Center. And so if you are in another community besides Bozeman, you may have heard about the Montana Women's Business Center. And so our goal is to help women start and grow businesses. And we try to give them access to grants and capital and things like that. So we help anyone that needs it, including nonprofits, but our focus at the Montana Women's Business Center was helping women, and then Prospera helps everyone. So a little bit of background there. It's a little confusing because we kind of have two names at our organization, so a little bit tricky. But do know that I have been in your shoes before. We are a nonprofit at Prospera, and so I do understand where everything's coming from and all the confusion. There is a lot that is happening right now. Probably like you guys, we're struggling to figure out what our plan is for our fundraisers for this year. We're an organization that has a membership, and obviously those memberships have slowed down quite a bit. And so I certainly know the pain that you guys are feeling as executives at local nonprofits. So I'm going to go ahead and get started. Next slide, please. So I always kind of like to start, before we kind of dig deep into talking a little bit more about all the different loan options, I always like to remind businesses that they should be thinking about a line of credit. In and out of a pandemic, you should be thinking about having a line of credit just to make sure that your organization isn't counting on credit cards or anything like that would have a high interest rate. It's just a much easier thing to set up through a local bank, and it's a much lower interest rate. And so it's something I like to help people. I like to help people get that set up before they start their nonprofit or their business, so that in times like this, we're ready to go. We kind of have a backup plan for cash coming in. So I always like to mention it that lines of credit are available at banks, and that's an option that is always going to be available to you. And it's something that I just like to remind people of. Next slide, please. This is what everybody's talking about. Moving forward, I'm going to be using the acronyms for these different loan programs just because they're kind of a mouthful. The two programs are the Paycheck Protection Program, or I'm going to be calling it the PPP, and that is part of the CARES Act, which is an acronym that a lot of you guys have been hearing about. The other loan that is currently available, it's called the Economic Injury Disaster Loan, or I'm going to be calling it today the EIDL. That is the loan that is currently available, and I'll be going through the differences between both of them and when you can apply for the other one. So starting from the very beginning, from the top here, the uses for each one of these programs are very clear here. So on the left-hand side, on the PPP loan, you can apply for payroll expenses, employee salaries, mortgage interest, rent and utilities, and interest on debt occurred before February 15th. The EIDL loan is for payroll, fixed debts, accounts payable. I'm really calling this kind of the working capital loan, just to kind of be able to help people pay bills that are coming in. Like for instance, for us as an organization, we were working on changing locations and moving into a bigger space. We're gonna apply for this money to be able to continue to do so. Just because our donations have slowed down, we're kind of counting on these loans to kind of help us get to that next level still as an organization. Moving down the line, with the PPP loan, you can apply for up to 2.5 times the business's average monthly payroll in the last 12 months, and then up to $2 million for the EIDL loan. The rate for these is fixed at 4% for the PPP, and then for the EIDL loans, it's 3.75 for small businesses. And what's not on here are most important to what you guys are thinking about, which is the 2.75 for nonprofits. The terms on these loans, and this is going to be a little bit confusing for people, but for the PPP loans, the terms on those are going to be there's no payments for 6 to 12 months, and then it will get termed into a 10-year term loan at 4%. For the EIDL loans, again, there's no payments the first year, and then it gets termed into a 30-year loan. And then in terms of forgiveness, this is where people are getting very confused. For the PPP loan, up to 100% with approval, I'm going to do a kind of an equation with you guys, so you guys, because it's not like we can write off, or not that we can get covered the payroll moving forward. It's just going to cover 8 weeks of payroll. So I want to make sure that that's going to be clear for you. And then for the EIDL loan, 0% is eligible for forgiveness, but I am going to be telling you about a $10,000 grant opportunity. So that's just kind of a general overview. That's like the 50,000 level view. And now I'm going to dig a little bit deeper on the next slide here, going through the difference between the two of them a little bit more in depth. So this is a spreadsheet I've put together just because I'm getting so many phone calls from businesses and nonprofits that really need to understand the background and the idiosyncrasies of each one of these. So with the PPP loan, obviously it starts with eligibility up at the top there. I should have used a larger font, sorry about that. But eligibility for nonprofits is for the PPP and the EIDL loans. You guys can apply for both of them. The loan terms, I just went through that with you guys. The payout, so this is where people are a little bit confused. With the PPP loans, that is going to be through lenders at banks. And so those are not available yet. And so I'm going to be talking more about that program because it's not available yet. The one that is available right now is the EIDL loan, and that's through the SBA. And that's that sba.gov/disaster website that a lot of you have been hearing about. So the application date for the PPP loan is June 30th. That's an important date just in general for that grant or for that loan program. And then the EIDL loan, you have until September 30th to apply. The deferment, like I said, for both of these, you can get terms up to 12 months before you actually have to start paying. And there are no prepayment penalties, which is great. The uses, we went through that a little bit, but just to be clear, on the PPP, it's employee salaries, payroll expenses, retirement contributions, mortgage, rent, and interest on the debt. On the EIDL, it's the payroll, fixed debts, accounts payable. The processing on the PPP loans, again, not available yet. I keep getting phone calls about this. It's not available yet. The lenders, if you were on a call that I was on last week with the Bozeman Area Community Foundation, some of the banks were ready to be kind of taking these phone calls, even though the back end of things weren't set up. They were just trying to get those nonprofits and businesses in their queue. They have changed their tune since last Friday. They are now saying, wait, we need to hear from the SBA as to what they're really going to be asking us to do, because we're actually finding out that hopefully the application process will be a lot easier than what it has been in the past. The processing on the EIDL loans. So last week, again, if you were on that Bozeman Area Community Foundation conversation, the application was very complex when I was giving that talk last week. In the last 24 hours, yesterday, they updated the application, and it's very easy. And I'm going to walk you through that step by step today, and you will have access to that website when I'm walking you through in just a few minutes. I'm seeing that question popping up here. And then in terms of requirements, so again, you just have to be in business for, since February 15th in general for both of these loans. For the PPP loans, you don't have to have any collateral, which is amazing. For the EIDL loan, if you ask for more than $25,000, there's a good chance that they're going to be lenient on that, but they're saying in the paperwork that you have to have some sort of collateral if you have an ask greater than $25,000. Now the emergency grant, this is what keeps coming up. This is all part of the EIDL grant. This is the one that you can apply for right now. And that once you apply for that, you get you're going to get access to a loan officer, and you're actually going to be talking through terms of that EIDL loan. And once that paperwork gets processed, you are supposed to be able to get the check within 3 days. I have yet to see that happen yet, but the SBA application last week was crashing literally by the minute. And so I'm thinking this week we're going to see a lot more movement on those $10,000 advance grants, they're called. The loan amount for the PPP, a maximum of 12 months times 2.5, or a 10 million cap. The EIDLs is a $2 million cap. And then the loan forgiveness, this is what keeps kind of coming up here, is this loan forgiveness part. So in the PPPs, you spend money during the first 8 weeks after you're issued the loan on payroll costs, salary, wages, healthcare, insurance premiums, mortgage or rent on a building and or property, retirement contributions and covered leave and utilities. That gets covered for the 8 weeks only. Okay, so that's where people are very confused. They're just thinking they can apply for whatever they want. It's all going to be forgiven. That's not the case. It's you basically will only get the 8 weeks forgiven. So that's the key there. The loan forgiveness on the right-hand side under the EIDL, loan forgiveness is not available on the amount that you're asking for. If you get the $10,000 EIDL advance, it will be deducted from the loan forgiveness in your PPP loan. So it basically gets transferred over to that PPP loan and gets loan forgiven over there. So that's part of what's confusing people as well. And then if you've already applied, so let's say last week you got on the SBA.gov/disaster website and you applied and you probably had a horrible experience because the system kept crashing. I am encouraging people to go back in and apply under the new system, because now you have the ability to apply for that $10,000 EIDL advance. That is something new that just really came up in the last 24 hours, where you can literally click a button and get your name written down for that. So I'm going to be going through with you guys so you guys see exactly where it is on the application. Next slide, please. Okay, again, I'm encouraging people to apply for the EIDL loan. There is the website right there, SBA.gov/disaster. I'm encouraging nonprofits to do this. At the very least, apply for $25,000, which is unsecured. Like I said, there might be some leniency there. And like I said, you won't have to pay anything on that loan for up to 12 months after you get the loan. And then you can just pay it off right away. Let's say that this turns around in the next month and your revenues are down as much as you think that they are. So you can just basically return that money and not have any prepayment penalties. So that's the key with these EIDL loans, just making sure that you're paying attention to dates and making sure that you're aware that you are potentially going into an agreement with a loan. Another thing I want to mention is that they cannot reset your password, so write it down. People have been asking me about that, and unfortunately I don't have access to give anybody's passwords. So make sure that you write things down. Next slide. So this is the new website. It's very exciting if you're a nerd like me, because trying to talk people through the system last week was very stressful, because they had multiple forms they had to fill out. You need to gather a lot of information. So now they have a streamlined process requirement. And so I'm going to walk you through all the way down to the submission. So if you get all your documents ready ahead of time, there's no reason that you couldn't actually apply for this loan and that EIDL grant in less than a half an hour. So this is what you'll see when you go to the home page. And it's just going to talk to you about how they've streamlined the process. They're recommending that you give yourself 2 hours to fill it out. Like I said, it can be done pretty quickly if you know basic information about your business, which we're going to go over today. Next page, please. Okay, I know that this font is small. I'm hoping that you guys can see this, but on the first page, they basically are having you self-certify your eligibility to be able to actually apply for this loan. You're going to see on the bottom here where it says choose one, and you'll see a couple different bullet points scrolling down. It says applicant is a private nonprofit. As a nonprofit, you're going to select that one. Then down below, you're going to check and review all the following. It says applicant is not engaged in any illegal activity. You do not have any delinquent child support obligations. Obviously, as a nonprofit, you wouldn't have that. You're not an agricultural enterprise. You do not have any sort of, there's kind of a funny thing here. Just make sure that you're doing everything legal and without sexual content, and that you've got, that you don't have any of your proceeds coming from legal gambling activities, you're not lobbying, and that you're not a municipal government. So you check all those boxes and then you hit continue. Page. Pretty easy, like I told you here. So the next page, you're going to enter in some business information. You're going to enter in the business legal name of the organization. If you guys have a different trade name, so a lot of people, like for instance, we're Gallatin Valley Foundation for Economic Development, which is a total mouthful. That's our business legal name, and our trade name is Prospera Business Network. So if you have a situation similar to that, that is what you would put there. Here I put my EIN number, which is what you should have. Then this next one says organization type. This is a drop down, so they give you options. So it's pretty easy going. The next one, you just click that you are a nonprofit organization. It says, is the applicant a nonprofit organization? And then the next one says, are you a franchise? Obviously, most likely you guys would say no. Here's where you have to start to gather a couple things for this application to go quickly for you. It says gross revenues for the 12 months prior to the date of the disaster, and they're saying the date of the disaster is January 31st, 2020. So those are going to be your gross revenues. So obviously work with your accountant or your finance director to pull your profit and loss statements for your gross revenue, and that should go there. The next line is your cost of goods sold for those 12 months. Again, that should all be on your profit and loss statement. The next one, rental properties for residential or commercial. There's a good chance none of you guys have, some of you guys actually might have some rents that are rental properties and you had some lost rents due to the disaster. If that's the case, fill it in there. The next one you're going to fill out is nonprofit cost of operation for the last 12 months. This one has been confusing for nonprofits. Basically fill in your nonprofit expenses for those 12 months. Next page. At the top, this is again still under the business information tab. It says combined annual operating for the 12 months prior to the date if you are a faith-based entity. So these are just for faith-based organizations. You can skip these questions. As you can see, they're not required for those two top ones there. Thank you so much, Shelby. So yeah, those are for faith-based organizations. And then the next question is, have you received any other grants or loans for this disaster? So for instance, we're applying for some new loan funds to be able to give out to different businesses within Gallatin Valley. So if we get those loan funds, we're going to put that there. If you have not received any loans or grants from any of this yet, don't put anything there. And then of course, just provide us a short description on what that money is. Next, we're going to just go into some basic information about the business, the primary address, the business email, the date the business was established, the current ownership, since date, and that information should all be on your 990s that you guys already have. Then you're going to fill out your business activity. Again, this is a drop down, and so that should be pretty easy going for you guys too. And then the last question is number of employees that you had in January 31st, 2020. Next page. Okay, now we're already halfway done. It's not so bad, huh? So now we're on to the business owner's information. This is where it gets a little bit tricky for nonprofits. There obviously is no business owner. So what they're recommending is that use the executive director's information or an authorized representative's information. So sometimes we're having board chairs fill out their information, but we're basically gathering personal information. The first name, last name, phone, the title of that person, their ownership percentage. For that, it's a required field, which is making it very tricky for nonprofits. So we're just telling people to put in 0 if you can. Email address, social security number. This is where a lot of executives are not feeling comfortable with it, but that is where we're telling people to actually get the information from the executive director, that birth date, their place of birth, if they're a U.S. citizen, and then their address and things like that. So that's on the next screen as well here, the next slide. So there's just some basic information. And then you can add an additional owner if you wanted to do an executive director and a board chair there. So, all right, see, it's not so bad. Okay, so now we're on to the additional information tab. So this is, you're almost there, folks. And so they just ask you a few basic questions here. Have you been convicted of a crime? Is the applicant currently listed as the owner suspended or debarred from the federal government receiving federal grants or loans? Are you presently subject to an indictment? Couple different criminal offense questions there. Obviously, you're probably going to fill out no's there. And then anybody who's filling out this paperwork that maybe isn't the owner of the organization or the nonprofit, if you're a preparer, then that's where you would put in your information. Some people are paying their accountants to fill out this information, and that's where that person's information would go. And then the most important part of this is down below, you'll see it's a very small box, which is funny, but it says, I would like to be considered for an advance of up to $10,000. That's that check mark box. And that is where basically your application ends. Thank you, Shelby. And then in the end, I don't have an, oh, I'm sorry, there's one more page, sorry about that. And then it says where to send funds. You literally, a lot of people are thinking this is like a scam or something like that. The SBA has confirmed with me that this is indeed what they want to have there. They want to be able to get money directly into these nonprofits and business hands very quickly. And so they're asking for your business name or your bank name, your account number, and your routing number. And in there, you just self-certify saying that you are, you know, that everything you supplied is true to the best of your ability. You hit next on the bottom, and then you will get a summary of all that, and you should get an email just stating that you've applied for the loan. And then theoretically, you are in the system. And people are starting to get emails back from loan officers, is what I'm hearing. So, it's a pretty quick process now. So as you can see, you actually don't ask for an amount anymore. On the past applications, you actually had to ask for an amount. Now they're not even doing that. That's going to be a conversation that you have with a loan officer. So it's going to be a one-on-one conversation. You don't need to commit to anything until you have the chance to talk with a loan officer. So it's worth connecting with a loan officer just to understand your different options. So I know that's a lot. I just talked about the EIDLs right now. We are going to be going into a second half of this conversation where we're going to go through the CARES Act, which covers that PPP loan that we talked about at the beginning of this conversation. So I'm only going to answer questions right now about the EIDL loans. Okay, I know that there's a ton of questions going on about layoffs, unemployment. We're not going to talk about unemployment right now. That's a whole nother hour. I'm just going to stick to the loans right now. If you feel like you need to have questions about unemployment answered, I can have you sign up as a client and you and I can talk it through one-on-one, but we're not going to dig deep into unemployment right now because we're already at 2:30. So Shelby, do you want to go ahead and open up the floor to EIDL questions?
Yep, absolutely. And I know we had a couple come through about EIDL. Would you give an example of a fixed debt for EIDL applications?
Yeah, a fixed debt would be, let's say you bought a car for your nonprofit. So fixed expenses is something that you have regardless if you're making money. So most of us are looking at fixed expenses right now, right? I mean, most of us aren't bringing in that much money right now. And so we've got these fixed expenses, rent, maybe we bought a copier for our office. So we've got that debt that we have to pay every month. We have a car maybe that we bought for our organization. Maybe you bought a building, that's a fixed debt. So those are fixed debt options for you.
Perfect. And then I think this is regarding the EIDL, but can you explain the piece of employee compensation over 100K not being covered?
That is part of the CARES Act, and we'll talk about that in a second.
Perfect. Do you have an idea of the approval turnaround time?
For the EIDL Act, I'm hearing that people who applied yesterday are already starting to get emails, so I'm thinking pretty quickly. Our organization, Prosper Business Network, we're applying in the next day or two. So I am going to know that more firsthand in the next day or two. But I am seeing that, you know, they have to get through the mess from last week of all those loan applications that came through. And the people that applied last week, I feel so bad for them because now they have to reapply again under the system that I just walked you through. So there is a little bit of backup that they still need to get through, but I'm guessing in the next 2 or 3 weeks, you would probably have that $10,000.
Awesome. In terms of the application, what if you as a nonprofit are lobbying, but to an insubstantial degree? Does that impact your ability to apply for the EIDL loan?
Say that one more time.
If a nonprofit is lobbying, but to an insubstantial degree, does that impact?
Like a small degree of lobbying.
Mm-hmm.
Montana nonprofit, for instance, like where they maybe, I mean, I think if you just can't have your main activity being a lobbying organization. I know that all of us, right? I work for economic development groups. I'm always lobbying, right? I go to DC and I'm trying to convince them to give us more money and, you know, all those things. So albeit a lot of us as nonprofits do a lot of lobbying, but if that's our sole purpose as an organization, this is probably more for, well, it is for some nonprofits too, but they're just saying for some reason that those people are not applicable to this loan program. I don't know why. They've been changing a lot of rules, so that might change. You know, But like I said, churches used to not be able to apply for a lot of these loans, and now they're able to apply. So I'm not really answering your question, but there's a good chance that if lobbying is not, you know, on your 990s and it says that you are a lobbying organization, then I would say you are totally fine to apply.
Okay, and Liz just sent a clarification. If the primary purpose is lobbying, you wouldn't apply for an EIDL right now. Maybe that will change.
Right now, at this point, I mean, I'm seeing that question come in from Liz. You know, Liz, I would say that you try to do it, but I think you're going to get, I think, like I wouldn't consider MNA as being as just a lobbying organization. So I would probably apply and then have that one-on-one conversation with the loan officer. Do your best to get through the system is probably what my advice to you. Try to get through the system as much as you can, and then you can have those conversations on the one-on-one level.
Perfect. There's been some concern, especially for nonprofits, with having to enter their Social Security. It looks like on this application, an EIN is permissible, so your normal nonprofit tax EIN. But is there any liability to the ED for their personal information?
I know, this is where it's getting hairy, folks. So originally, you know, on that first page that I showed you guys on, I can't tell which page it is right now, but under the first tab where it says business information, that's where you can enter your number. And then under the business ownership, that's where you enter your Social Security number, and an E number does not work there. So thank you so much, Shelby. So this is where it's getting hairy. And so this is, I've talked to the SBA office, just as I'm sure Liz Moore has, where we're just trying to figure out what advice to give to nonprofits here. And the only advice I'm giving is just have the executive director fill this out. In terms of an obligation, I still don't know. I'm going to be honest. You know, this is why there's a lot of questions in the systems that they have developed. And, you know, people like me are just sitting there poking holes in this, thinking about the 20 different kinds of people that are applying for these loans and the questions that they're going to come up with. So the best advice I've gotten is just fill out the executive director's information. If the executive director isn't comfortable, then another authorized representative of that organization, maybe a board chair. A lot of nonprofits have liability insurance to cover their board members. And so I am guessing that that is something that would kind of play into this, is just making sure that you've got that coverage at a board level. But yeah, this is the best advice I've gotten. And you may hear my presentation in 2 days when I do it for Prospera, and I may have different information. I'm sorry. I wish I had more clarification on that. I just really don't.
I think that's helpful. On the same page, there's a ownership percent that's required, and there was a question to clarify the percentage of ownership in the case of an executive director.
Yeah, I know. This is, again, a required field, which is making it very difficult for nonprofits. I've seen people enter in every number, and we just, at the end of the day, we're telling nonprofits to do the best that they can. So putting down like 1% or 2%, you know, as low as they can. And then having those conversations one-on-one. If it kicks you out of the system and 2 to 3% doesn't work for some reason, then I would just do your best and put in like 50%. But again, the SBA office in Helena doesn't even know what nonprofits should put here. So I'm doing the best I can to give you guys the information. At the end of the day, a lot of this will count on the one-on-one conversations you have with the loan officers. They know that you don't own the organization if you've hit the button that says that you're a nonprofit.
I appreciate that, Susie. And sometimes knowing there isn't a clear answer is a good answer. is helpful.
And you're welcome to put at 100%. Someone was saying that, why not 100%? Go ahead. I don't really have an answer for this one. It's making it very, very tricky. But Peggy Buchholz just said that she applied yesterday and she put 0. And Ben Hine just said the same thing. So 0 worked for them. So I would go with 0 just to kind of reduce your liability. Again, I have not personally applied for it. I just kind of walked through it and I asked questions of the SBA to be able to give you guys information.
Wonderful. There's a question on rent as an eligible expense under the EIDL loan. Is that not covered?
Under the EIDL loan, so that would be part of Sorry, I'm getting some kickback here on the sounds here. So rent specifically, I think a lot of people are confusing the PPP loan, which specifically covers rent, and there's a reimbursement for the rent. That is working capital. I mean, people need to pay their rent, so you could certainly cover it under the EIDL loan as well.
Perfect. And then, you know, I'll let you scan and see if there are any others that apply specifically to EIDL.
Yeah, I'm getting a lot of PPP questions, so
yeah. So maybe we'll
probably
move
move
that.
forward.
I will, I'll say a question folks asked a lot are what's the rationale for applying for an EIDL loan at this point in time over a PPP? And if you apply for one, can you apply for the other later?
Yes, you can apply for both, and most people will be applying for both. The PPP, which I'm going to go into detail about that right now, that is just a reimbursement grant essentially for 8 weeks of payroll. So if you're looking for long-term lending, you're looking for working capital to kind of get you through the end of the year, I'm recommending that people do apply for those EIDL loans. That's going to help you. The key is that you're just not applying for the same thing. Like for instance, on the EIDL loan, again, that's more of a working capital loan, which could kind of be considered almost anything. But specifically, you would just want to say that it's not covering payroll, the same payroll that it's going to be covering in the PPP. Does that make sense? You can't double dip and ask for the same thing in the EIDL and ask for the exact same thing in the PPP. Does that make sense? It's a little bit tricky, but again, that will be part of the one-on-one conversations you have with the SBA on the EIDL end, and then moving forward with your lender at the PPP level. So there is no problem for applying for both. We are going to apply for both as an organization. Obviously, we'd love to get 8 weeks of payroll and payroll related expenses and rent covered and basically forgiven. That's a no-brainer. So, and then it's a no-brainer to get the $10,000 on the EIDL advance as well. So it's one of those things where it's important to kind of think about what's your long-term plan if thinking about how much money you really need. So it's about doing your cash flow projections and being honest about the money that you think is going to be coming in this year, and maybe monies that are not going to be coming in, and making sure that you can cover yourself for at least 6 months of expenses. And so I would just kind of take it from there.
That makes sense. And one more quick question that was asked a couple times. Are the funds for either for EIDL or PPE, and I'm sure you'll cover this, are they first come, first serve? Do you anticipate there will be sort of a, no more available at a certain point?
I've heard two different things about this, and the SBA office was kind of confused about this as well. I'm hearing that it's important to apply early. I don't know what that amount is, and I don't know how fast it will run out, but I'm hearing that if you're going to apply for the EIDL, you should apply for it sooner than later. And so I would just say, again, you're not signing up for anything. If you fill out that form, you can have those conversations one-on-one later. And we're going to know a lot more by the time you talk to a loan officer in the next week or 2 or 3 weeks. You're going to know a lot more about the CARES Act than we do now. Just like I said, if you applied for the EIDL loan last week, it was totally hard paperwork and it took you all weekend to work on it. Now you apply for it and it takes you 30 minutes. So we're just learning new things every day. And so I just recommend just being flexible and just giving yourself options. And if you don't apply for it, you're not really giving yourself an option.
Perfect. Thanks, Susie.
And even if you don't need that money immediately, I would just kind of think about, the timing of it. You have to apply for it by September 30th. But do know that anything that involves a loan, even if they're saying fast processing, just to give things in reference here. So if you were doing one of these loans with SBA before, it would typically take you 2.5 months. They're going to, by the time you actually get the money, it's going to be like 3 weeks or so, 3 to 4 weeks. So know that maybe you don't need money today on March 31st, but maybe you'll need that money on April 31st, or there is no April 31st, April 30th, sorry. Maybe you'll need that money in a month. So it's worth getting the process started now if you think that you might need that money. Again, you're not committing to anything by filling out this form.
Perfect. Thank you, Susie.
Yeah. Okay, we're gonna go to the next page about CARES Act here. Again, this is not available right now. I'm getting a lot of emails about this. It's not available right now. This is what the president signed into. This is what the president signed off on over the weekend. So things are moving ahead. Where it is right now in the system is that the Small Business Administration needs to work on the SOP, it's the standard operating procedures for the lenders. Because now what happens is this is not going through the SBA lenders, it's going through the banks who are registered SBA lenders. So it gets a little confusing here, but for those of us that live in Montana, a majority, I would say 75% of the banks that we work with and we probably have daily deposits with, most of them are 7A lenders already. And so this is a 7A program. It's called the CARES Act, the PPP loan. It's not a new program at all. This is something that, you know, a majority of my clients that I work with at Prospera, they're getting 7A loans just to start a business. And so these loans are not new, but I'm hoping that the application process will be much easier than it is for people that have applied just for a normal startup of a business. So we're gonna go ahead and get started on information about the CARES Act. So like I said, last Wednesday night, this is when they basically released all the information about the CARES Act. You will see right above this first bullet point, a link to Marco Rubio's basically 2-pager analysis of the 900-page CARES Act document. This has been a super helpful document for me because it's clarified a lot of things and it's very thorough. It's one of the most thorough documents I've seen. And it's just type in U.S. Senate Committee on Small Business and Entrepreneurship, and then you'll be able to see this 1-pager that shows up. So just to kind of go through this really quickly, the Keeping American Workers Paid and Employed Act would provide $377 billion to help prevent workers from losing their jobs and small businesses from closing. The Paycheck Protection Program would provide 8 weeks of cash flow assistance through 100% federally guaranteed loans to small employers who maintain their payroll during this emergency. Why this is different is typically SBA loans are just backed by 75%. And now the SBA is saying we're going to back it at 100%. So there's no liability for these banks to take on these loans that may not end up getting repaid. It's very interesting. If the employer maintains its payroll, then the portion of the loan used to cover payroll costs, interest on mortgage obligations, rent, and utilities would be forgiven, which would help workers to remain employed and affected small businesses in our economy to recover quickly from the crisis. This proposal would be retroactive to February 15th, 2020 to help bring workers who may have already been laid off back onto payrolls. So they'll give you the ability to bring those people back on if you think that your business can be open. Obviously, this is a conundrum for a lot of the restaurants and bars because, you know, they cannot be open. There's a health directive that they cannot be open until April 30th. So for a lot of places, some of these loans will not work for them. And the EIDL loan is the best fit for them because there's no way for them to bring on that payroll because what would those people be doing for those 8 weeks? If they're not open, they wouldn't qualify. So moving to the next page. The Paycheck Protection Program is to support loans for small businesses with 500 or less employees, including 501c3s and 501c19s. The covered payroll costs include salary, wages, and payment of cash tips, employee group healthcare benefits, including insurance premiums, retirement contributions, and covered leave. The cost of participation in the program would be reduced for both borrowers and lenders by providing fee waivers and automatic deferment of payments for 1 year and no prepayment penalty. So this is where things are being held up with the SBA, is that typically lenders have a little bit more control over who they are lending money to. And they typically get fees off of these loans. And now they're saying that a lot of these fees will be waived. So let's say you apply for a PPP loan. Theoretically, there should be little to no fees for you to be able to apply for this loan, which is much different than a traditional loan. Typically, there's some closing fees. There's lots of UCC filing fees. There's a lot of different fees there. I'm sure if you've ever bought a house, you've seen a lot of fees there. Same thing with a commercial loan. This is much different, and this is where a lot of uncertainty is on the bankers' end of things. They're just really not sure how they are going to get paid out of this, and that's just the honest truth. They're in the business, obviously, of making money so that they can all donate to our And so they're just trying to figure out how they're going to get paid, how they're going to get people to pay them back if they're 100% guaranteed from the SBA and they're not asking for any collateral. There are a lot of questions out there, especially in the banking industry. I was on a conference call with 300 bankers today, and I'm on another call with 100 bankers in Bozeman tomorrow, and they're all asking the same questions. No one really knows. The maximum loan for the SBA Express loans will be increased to $1 million. And that's a big deal too. For some of the bigger nonprofits, it's nice to know that there probably will be an easier application process if you're asking for less than $1 million. Okay, going to the next page. Now I'm going to get into the FAQs. I've been getting a ton of questions about these, obviously, because there's a ton of questions that have come from it. And so I'm going to go through my FAQs. I'm hoping to answer a lot of your questions that are kind of showing up in the group chat. Where can I apply for the Paycheck Protection Loan? Like I said, when this becomes available, I know that the MNA team is going to let you know when to go to your bank. Like I said, last week, some of the banks just said, send them to us. We'll put them in a queue. We'll give them some basic information. Now they're saying, don't send anyone to us. We don't know anything. And so even their tune has changed here locally in Bozeman, at least. And so know that a majority of us are funded by banks. So there's a good chance that somebody who's on your board or someone that you have or a bank that you already have deposits with, they can probably help you with this. They're most likely an SBA lender. Next question, who's eligible for the loan? For small businesses that employ less than 500 people, I'm going to skip over this part because it's about restaurants and hotels. That has nothing to do with most of you. And then eligible franchise. Oh, and then I don't want to skip over the tribal businesses, the 501c3s and the 501c19s. The third part really has nothing to do with you guys, but I'm going to include it because a lot of us know independent contractors anyway. But I am an independent contractor or gig economy worker. Am I eligible? Yes, sole proprietors, independent contractors, gig economy workers, and self-employed individuals are eligible for the PPP. This is important because if you're a nonprofit like us, we kind of survive off of independent contractors. You know, I have a handful of them that we employ throughout the entire year. They've been with us for years. And so I'm glad that they're included in this PPP where they're going to be able to get some loan forgiveness on covering their own payroll for themselves as independent contractors. So this is important maybe for some of the nonprofits on the line here. Next page. We've talked about this already, but what is the maximum amount I can borrow? It's 2.5 times your average monthly payroll expenses, or up to $10 million. Obviously, a lot of us wouldn't qualify for that anyway with up to $10 million, but the amount is intended to cover 8 weeks of payroll expenses and any additional amounts for making payments towards debt obligations. This 8-week period may be applied to any time frame between February 15th and June 30th. Seasonal businesses will be measuring using a 12-week period beginning February 15th or March 1st. So we're obviously going to use, we just had an employee leave actually in the middle of all this. They had turned in their notice like a month ago. So we're going to use the time frame of earlier versus later because then we have a higher payroll average earlier in February than we do later on in kind of early March. So we're going to use that kind of 8-week period starting on February 15th where we had higher payroll to be able to make sure that we can maximize our loan amount. The next question is, how can I use the money such that the loan will be forgiven? The amount of the principal that may be forgiven is equal to the sum of the expenses for payroll and existing interest payments on mortgages, rent payments, leases, and utility service agreements. Payroll costs include employee salaries up to an annual rate of $100,000. So let's say you guys have a lot of employees at more than $100,000, they'll be prorated at $100,000 and capped out there. They will not get prorated. They will not be able to get their full amount. That full amount will not be forgiven anybody over $100,000. Hourly wages and cash tips, paid sick or medical leave, group health insurance premiums. And if you would like to use the Paycheck Protection Program for other businesses related to expenses like inventory, you can put that portion on the loan, but that will not be forgiven. And that's the portion that gets termed out at 10 years at 4%. So what I'm encouraging people to do, if you're an organization that has a lot of inventory or you need to buy a lot of supplies, I'm encouraging you to apply for the EIDL loan for those items, because you're going to get a much better term rate at 2.75% over 30 years. So I'm encouraging people just to apply for the PPP for the payroll portion of it, not to try to get working capital money or, like for us, expansion money, anything like that. I'm going to put that in my EIDL loan and not in my PPP. The PPP is for payroll. So try to keep your expenses that you're asking for focused on the payroll in this particular loan ask. When is the loan forgiven? The loan is forgiven at the end of the 8-week period after you take out the loan. So this is where it's confusing for the bankers. They're trying to figure out how they're going to certify the expenses. Is it like a reimbursement grant, which a lot of us who deal with federal and state grants, we're kind of used to that, where we have to prove that we spent that money. The banks aren't sure how they're going to be able to process all that paperwork. So this is a huge question that is coming up on the lending end of things, is how are they going to monitor all those expenses? They don't really want to go through line by line your rents, your payrolls, you know, all those things. And so this has been kind of a touchy subject for the lenders. So know that I'm hoping to have more clarification on this. But at the end of the day, what they're saying is that at the end of the 8-week period, after you take the loan, theoretically, that part's going to be forgiven. So what is the cover period of the loan? The cover period during which expenses can be forgiven extends from February 15th to June 30th. Borrowers can choose which 8 weeks they want to count towards the cover period, which can start as early as February 15th. And I was talking to you guys a little bit about our example where we had more payroll around February 15th than we did around March 15th. Okay, last page. We're almost there, folks. I know you guys got a lot of questions. How much my loan will be forgiven? I'm just going to kind of, I like answering these questions in different ways because as someone that's a teacher, I know that a lot of people hear things differently. So I've kind of presented it, and you may be information that you've heard obviously 3 times before, but I'm trying to give you guys a way of looking at it in different situations. So how much of my loan will be forgiven? The purpose of the Paycheck Protection Program is to help you retain your employees at their current base pay. If you keep all of your employees, the entirety of the loan will be forgiven. If you still lay off employees, the forgiveness will be reduced by the % decrease in the number of employees. If your total payroll expenses on workers making less than $100,000 annually decreases by more than 25%, loan forgiveness will be reduced by the same amount. So I was trying to think of an example for this. So again, you have the ability to bring people back on that you may have laid off before, so that's great. Obviously, this is an incentive for people to keep their employees. So this entire loan is about incentivizing businesses and nonprofits to keep those people off of the unemployment system and keeping them getting paid at their normal rate instead of a discounted rate in unemployment. So if you're asking questions about, can I pay for my inventory? Try not to put it under this loan. This is about payroll, and this is about getting a loan forgiveness on that 8 weeks of payroll. Let's see here. Am I responsible for interest on the forgiven loan amount? No, if the full principal on the PPP loan is forgiven. The borrower is not responsible for the interest accrued in the 8-week covered period. The remainder of the loan that is not forgiven will operate according to the loan terms agreed upon you and the lender. So like I said, most likely that additional amount, so let's say you ended up not using all the loan that you ended up asking for, maybe not all of it got forgiven. At that point, it's going to get converted into that 10-year note at 4%. What are the interest rates and terms of the loan amount that is not forgiven? The terms of the loan not forgiven may differ on a case-by-case basis. Again, you have a lender. You're going to be talking these situations through. Most likely your lender is someone that knows your organization and knows you really well. They're going to come up with a solution that works for you the best. However, the maximum terms of the loan feature a 10-year term with interest capped at 4%, and 100% of the loan is guaranteed by the SBA. Again, this protects the banks. You will not have to pay any fees on the loan, and collateral requirements and personal guarantees are waived. That is huge. For anyone that's ever gotten a loan, I deal with people that need loans all the time. And typically we need some sort of collateral like a house or a car or a piece of equipment, something like that. They're not asking for any of that. So this is great, especially for a nonprofit, because typically we don't have a lot of assets. Usually our assets are our people. So this is great. Loan payments will be deferred for at least 6 months and up to 1 year starting at the origination of the loan. Again, when is the application deadline for the PPP? You have to apply by June 30th. So it's a lot of information, I know. One last page, folks. Sorry, I misunderstood. One last page. I know it's painful sometimes, but I took out a bridge loan through my state. Am I eligible to apply for my paycheck protection? Yes. The one thing I want to clarify is that if your organization just got a traditional 7A loan, there's a chance you may not qualify for all 3 of the loan programs. So that's one thing that's a little bit different, but we're still working on clarification on that. Last question. If I have applied for or received the EIDL loan related to the COVID-19 before the Paycheck Protection Program became available, will I be able to refinance it into a PPP loan? Yes. If you received an EIDL loan related to the COVID-19 between January 31st and the date at which the PPP becomes available, you would be able to refinance the EIDL into the PPP loan for loan forgiveness purposes. However, you may not take out an EIDL and a PPP for the same purposes. So like I said, you can't double dip and say, I'm applying for the EIDL for payroll, and then go to the PPP and say, I'm applying for payroll. You have to just be very clear about what you're applying for. So I'm asking people to think about working capital needs for the EIDL, and then thinking more about payroll needs on the PPP loan. However, you may not take out an EIDL and a PPP for the same purposes. I just said that. Remaining portions of the EIDL for purposes other than those laid out in the loan forgiveness terms for a PPP loan would remain a loan. If you took advantage of the EIDL loan, or if you took advantage of the emergency EIDL grant award of up to $10,000, that would be subtracted from the amount forgiven under the PPP. So you'll have the chance to kind of get that. So when you apply for both, they're going to know that, and then it'll actually get forgiven under the PPP, and it will turn into a grant at that time. So I'm sure there are a lot of questions. I'm seeing them coming through here. So I know that's a lot of information. What I'm going to say here is just be patient, apply for the EIDL loan now, and be patient on the CARES Act. I know there are so many questions, but I'm going to be honest, there are a lot of questions that I cannot answer today because we're still waiting on clarification from the Small Business Administration. The lenders don't know these answers. The district offices don't know these answers. We're doing the best we can with the information that we're given right now. So I'm going to ask for your patience right now, because I know that it's a really trying time. And you're trying to figure out how you're going to keep people employed. Nothing has happened yet, and there's nothing you can do on the PPP anyway. So you can't worry about it at this point. Just know that it's going to become available. So, all right, let's go ahead and start with questions.
Perfect. Some that you may have answers to, or you may have covered and just need some clarification. Can the nonprofit use the PPP to cover the cost of contractors?
Yeah. Oh, I'm sorry, for the loan forgiveness portion of it, I haven't heard that. It's just people that are on payroll. Typically independent contractors, they've got their own workers' comp policies. And so I don't think that independent contractors will be covered under the PPP forgiven portion.
Okay.
If you need money to pay those people, I would apply for that money under the EIDL, because it's such a low cost loan that I would apply for it through that.
That is a great clarification. Thank you. How about part-time employees? Are they able to be covered under the PPP?
Yep. It's everybody that was on your payroll. So PPP, or I'm sorry, PPP, part-time employees. A lot of acronyms here today, folks. Sorry about that. The part-time employees would be covered under that.
Wonderful. You spoke to this a little bit with your own organization, but how does it work if someone leaves for an unrelated COVID reason, and then you weren't sure that they were leave? How would that work? I think you covered that with the reduction in the forgiveness.
Yeah, so like I said, what we're going to do when the time comes is that we're going to apply for that 8-week period starting on February 15th, because we had a higher payroll at that point. So we'll be able to ask for more as a loan ask. But for all of the folks out there, we just want to make sure that if people are leaving for non-related COVID reasons, that you're making sure that you're getting a termination letter from them, making sure that you're doing the proper exit planning work, paperwork with them, so that you have documentation to show that, you know, this person was not let go. I am maintaining my payroll of the people that are employed and that are going to be employed with us.
Perfect. Are there any credit checks or credit ratings for the PPP loans?
This is very interesting, and this keeps coming up. Because they're 100% guaranteed by the SBA, and there's no personal guarantee and there's no collateral, I'm guessing the credit scores are going to play a role in this, but as a nonprofit, you don't have a credit score. So this is where it's going to get tricky. And that was a question that came up in our call today. It was just about, like, you know, how are the banks going to be protected? And the banks, you know, obviously the SBA is going to cover all those fees, but they also don't want to waste their time either. And collect, I mean, there's a lot of paperwork that go into a loan. And so they're just trying to figure out how to protect themselves. But in terms of credit, if you were a business owner, yes, that will come into play. But as a nonprofit, that came up today and we don't have an answer on that. I doubt it.
Okay.
Probably look at your payment history. I mean, just like, you know, they'll probably look at, you know, have you been delinquent on payments as a nonprofit organization? They'll probably look at your historicals and things like that. You know, they'll look at probably your burn rate on your AR and your AP to kind of see when things are coming in, how fast you guys collect, how fast you guys pay other people. So maybe that will come up. I'm not exactly sure.
Right. That's a good clarification. So Susie, there are a couple of questions in the chat that I think are related back to this idea of, if you've let somebody go or you rehire before, if we hire employees back before June 30th, will the forgivable portion of loan cover back pay?
Oh, the back pay of while they were let go.
Mm-hmm.
So typically I'm guessing those people were on the unemployment system. So I want to understand this question a little bit more. Can you say it one more time?
Yeah, and Ben, if you want to speak, you know, clarify it as well, feel free to unmute yourself. But the question is, if we hire employees back before June 30th, will the forgivable portion of the loan cover back pay? So they had let folks go and they're hiring them back.
That I'm not sure about, because there's a good chance that those people were getting unemployment benefits. You're tricking me here. I don't know the answer to that. I need to think about that answer a little bit more. Whoever that was, they can pop me an email and I can try to do some digging on that if that's an important question to them. I more clarification on that, and I'll probably have to actually look at the actual CARES Act to try to find that answer, because that really hasn't come up about the back pay portion of it. And that's what I'm trying to understand a little bit more too.
Thank you, Susie. We'll take a look. And this is the opposite side of that question, which is, if we keep employees on and paid during the 8 weeks we use the PPP, will any job attached layoffs after that affect the eligibility for turning the loan into a grant, or that accessing that forgiveness?
I don't think so. If they're job attached, then they should be just fine. If they're job unattached, that's where the questions kind of rise for me. I'm sure a lot of people are still struggling trying to understand all the different unemployment terminology. When when people were letting people go, when all this was starting to happen 2 weeks ago, people were confused about what they should be telling their employees, and they were confused about whether they should say if they're unattached or attached. And so I think that's going to come into play quite a bit. I'm just not sure how it's going to come into play, because I think some people were letting people go under the wrong terminology. So I think this is a gray area that we're just trying to figure out, and I'm hoping that we'll have more clarification on that by the end of the week when we hear more about the SOP that's coming out with the PPP. It's a lot of acronyms again.
Thanks, Susie, for that. Just a quick clarification for Diane Olson. So EIDL is not part of CARES Act, but PPP is. Again, with the acronyms, that's correct. And Susie, you might be able to say this better, but it's the phases of the federal relief and bills that have been passed, and CARES includes PPP.
Yeah, and I'm going to be honest. I wish that they would have just kind of, given themselves as a federal government a little bit more time, because now people are so confused because you've got two different grant options or two different loan options. There's a grant you might be able to get. It's causing a lot of confusion. So I think a lot of, we rushed into, we didn't know, we've never dealt with something at this level before, but it's causing a lot of confusion on the back end for a lot of you. And I know that it is. And I'm going to do the best I can to educate you along the way. But the educators who are trying to educate me are still confused. And so I'm just trying to keep as much as I can clear for all of you.
Perfect. And then Dixie asked what all is included in working capital use. And I think we have some answers for that on the presentation.
Yep. And, working capital, like I said, it can be used for, like for instance, it's anything to pay for day-to-day operations. So, like for instance, I need to go buy supplies for trainings. I need to pay independent contractors. I need to, I'm going out to take a donor out to coffee. Those are kind of working capital things. Obviously we're looking to get into a new space. That would be working capital. We're going to be using that to be able to do the work that we're doing. It's not a debt. We're creating that debt ourselves. Does that make sense? It's like kind of the things that people put on their, like, as employees, we put on our business credit cards and we're like, hey, we need this piece of equipment to be able to do the work that we're doing. It's just kind of like, in order for us to be doing some things, we kind of have to spend some money sometimes. So that would be working capital.
Perfect. Thank you for that, Susie. So in the interest of time, I'll say if there's, I know there are some questions we didn't get to. Some we'll send some clarification out in some other resources. We have another session tomorrow with some folks from SBA that will probably have some similar, we're not sure answers, but we might be able to answer or address some more. And we'll also keep posting resources on our website. And I absolutely encourage you. Some of the questions are so individual and really, tailored towards your organization. Please feel free and feel entitled to reach out, and seek one-on-one consultation with experts that know what they're talking about, like Susie. And it's a good step to take for your organization, because some of these things are just going to take that high level of expertise.
Yeah, and I definitely recommend being in contact with your executive committees for your boards, your accountant, someone that helps you file for your audit. These people are watching this just as carefully as I am, and they understand the system really well. Definitely give them a call and get them in the loop on what you're thinking. I think that's a wise decision as well.
Wonderful. Well, thank you all for joining us. And Susie, thank you so much for sharing your expertise and pre-answering a ton of questions and then staying on top of the ones that popped in as we were going. That was wonderful. I feel like I know a lot more. I feel we're in a good situation to move forward. So thanks so much.
Yeah, and then I'm doing another webinar through Prospera. Again, my presentation is changing every single day. The presentation you may have seen from me last week is different than it is today. So, and I'm happy to do another one for MNA, whatever it takes. We want to make sure you guys are educated. But again, don't fear. We're going to know more, but you just have to be patient at this point.
Wonderful. All right. Thank you all. Thank you, Susie. Good luck.
I didn't